guys, today we're going to talk about Bollinger Bands. Bollinger Bands are a type of chart indicator for technical analysis and have become widely used by traders in many markets, including stocks, futures, and currencies, crypto, any market, you name it, people use Bollinger Bands. Bollinger Bands were created by John Bollinger in the 1980s. The bands offer unique insights into price and volatility. In fact, there are a number of uses for Bollinger Bands, such as determining overbought and oversold levels, as a trend-following tool and monitoring for breakouts. I love Bollinger Bands, by the way. I use Bollinger Bands all the time, every single day. One of my favorite indicators. Bollinger Bands are a trading tool used to determine an entry and exit points for a trade. The bands are often used to determine overbought and oversold conditions. Using only the bands to trade is a risky strategy, since the indicator focuses on price and volatility while ignoring a lot of other relevant information. Bollinger Bands are a rather simple trading tool and are incredibly popular with both professional and at-home traders. Now, overbought and oversold strategy for the Bollinger Bands. A common approach when using Bollinger Bands is to identify overbought, oversold market conditions. When the price of an asset breaks below the lower band of the Bollinger Bands, prices have perhaps fallen too much and are due to bounce. On the other hand, when price breaks above the upper band, the market is perhaps overbought and due for a pullback. Now, using the bands as an overbought and oversold indicators relies on the concept of the mean reversion of the price. Mean reversion assumes that if the price deviates substantially from the mean or average, it eventually reverts back to the mean price, which is correct. In range bound markets, mean reversion strategies can work well as prices travel between two bands, like a bouncing ball. However, Bollinger Bands don't always give accurate buy and sell signals. During a strong trend, for example, the trader runs the risk of placing trades on the wrong side of the move because the indicator can flash overbought or oversold signals too soon. To help remedy this, a trader can look at the overall direction of the price and then only take trade signals that align the trader with the trend. For example, if the trend is down, only take short positions when the upper band is tagged. The lower band can still be used as an exit if desired, but a new long position is not opened, since that would mean going against the trend. So, remember, guys, these are really great tool. Really great tool. So you get to the top of the Bollinger Bands, you're in oversold territory, you're going to get a markdown in price, get some accumulation, boom, get a markup in price, distribution, markdown phase, reaches sold territories, you get a bounce, boom, distribution, markdown. Remember, guys, like I said, use all these tools together and create the best strategy you can, and you will be successful. 100%. So at the core of Bollinger Bands, measure deviation, which is why the indicator can be very helpful in diagnosing a trend by generating two sets of Bollinger Bands. One set using the parameter and one standard deviation, and the other using the typical setting of two standard deviations. We can look at price in a whole new way. We will call this Bollinger Bands. So this is how it works, guys. We'll go ahead and look on some charts here. Right now, typically you see these bands getting tight. You know you're going to get a move to the upside, or move to the upside or the downside. Okay? That's what these bands mean when they get real nice and tight like that. It's not going to tell you if it's going up. It's not going to tell you if it's going down. Now, typically, right here, as you can see, I'll zoom in a little bit. The bands got really tight and they started to expand to the upside green. Okay? And that typically means you're going to get some price action. Okay? To the upside. Now, if they get really tight and you start seeing it curl down in red, well, yeah, you're going to get some downside price action for sure. You're definitely going to get a markdown in price. Right here, bands got tight. What'd they do? They started falling over, and bam, we got marked down. Bands started getting tight. They got green for a minute. Got some markup in price. Remember, this is a lagging indicator too, so boom, right here, oversold or overbought. Boom, come down to the middle, about mid territory of the bands here. Gets a bounce, boom, overbought. Comes down, goes up, overbought, comes down. If the price action ever goes outside of the Bollinger Bands, it's always going to come back in. Remember that. So yeah, guys, that's Bollinger Bands. Something to add to your tool belt of trading, and will make a big, big difference in my opinion. I use these daily. Love them. Learn how to use them. Get used to them. Get familiar. Get comfortable, and make some money. I'll catch you in the next one.